Wall Street was hurt by one of the worst sell-offs yesterday. The Nasdaq and the S&P 500 incurred the heaviest losses. And today, the benchmark stock indexes are likely to accelerate their decline. Global risk aversion was caused by Fitch Ratings. If macroeconomic data and the stock performance come as expected, Wall Street could get stuck in a pessimism. The major stock indexes responded to the downgraded US credit rating by a slump. The Dow Jones tumbled by 348 points or 0.98% on a Wednesday. The Nasdaq collapsed by 2.17% and the S&P lost 1.38% to close at 4,513 points. The three stock indexes also traded in the red in the New York pre-market. The S&P 500 even briefly plunged below 4,500 points. The indexes were badly hurt by Fitch Ratings. The agency downgraded the US credit rating to AA+ from a AAA, citing the widely expected deterioration of the public budget in the next 3 years, as well as a swell in public debt. Fitch is the second major rating agency after Standard & Poor's to strip the top global economy of its AAA rating. In response to the news from the S&P 500 logged the sharpest intraday fall since April 25. It was also the first session since May 23 when the benchmark index dropped by more than 1%. The Nasdaq plunged by 2.2% yesterday, negating overnight more than a half of its gains in June. Some large brokerage companies said that the downgraded rating would hardly entail a serious bearish trend in the US markets, as the economy is healthier nowadays than in 2011 when S&P 500 slashed the US credit rating. Nevertheless, being less sensitive to interest rates, stocks of companies with a mega capitalization, including Tesla, Nvidia, Meta, and Apple, lost ground, whereas yields of 10-year treasuries climbed to the highest level in 9 months. The high-tech sub-index tumbled by 2.6%, being the worst from 11 main sectors in the S&P 500. 9 of the sectors closed with losses. The ADP payroll processor reported that employment in the United States private sector increased more than expected. This proves the resilience of the labor market that could safeguard the economy against a recession. The corporate picture reveals strong results. According to Refinitiv, almost 2/3 of the companies tracked in the S&P 500 have already presented their quarterly results. 79.9% of them reported better than expected corporate earnings. Advanced micro devices shares sank by 7% due to the fears that its goals for expanding artificial intelligence could be too ambitious. Still, the concern was overshadowed by the optimistic forecast for the year-end. On Thursday, futures for the US stock indexes continued to decline under the pressure on rising Treasury bond yields. Growth stocks, including Apple, Alphabet, and Microsoft, fell by 0.2% to 0.4% in the pre-market trading. After Wednesday's private payroll report showed the continued resilience, market attention was focused on the fresh jobless claims that were in line with the market's forecasts. The number of first-time unemployment claims rose by 6,000 last week to 227,000, matching the consensus. If Yuga remains at about 5 months high, the growth was modest. That correlates to other macroeconomic data released this week and suggests the likelihood that the US Fed could extend the cycle of monetary tightening. Nevertheless, the full picture will be available tomorrow. New corporate reports are also on investors' radars. Apple and Amazon are due to unveil their quarterly reports after the closing bell. Apple is likely to report falling iPhone sales in its April to June quarter as buyers wait for the new model. This will shift the focus of investors to using artificial intelligence to boost Apple's growth. Meanwhile, Amazon.com is expected to post more than 8% revenue growth in the second quarter, supported by a recovery in its advertising and e-commerce businesses. The reports of the high-tech giants will be released after the closing bell. For now, Qualcomm's shares sank by 8.4% ahead of their pre-market as the company's fourth quarter sales forecast came in below market expectations. Qualcomm said it would likely cut jobs as consumer spending on gadgets like smartphones remains low. Shares of its peers, Nvidia and Intel, fell by 0.5% each. PayPal shares lost 7.8% as investors were disappointed with the payment company's quarterly operating margin. Moderna shares rose by 3.3% as the company raised its full-year sales guidance. The U.S. non-manufacturing PMI, manufacturing orders for June, and comments from Richmond Federal Reserve President Thomas Parkin are also on investors' radars on Thursday. Unlike the stock market, the currency market has a clear-cut winner, the US dollar. Its index has been extending its steady rally. It was trading at 102.60 at midday and 0.11% up. The instrument is expected to trade into the CAD between 102.30 and 102.90. Yields of US Treasuries and the US dollar are clinging to their highs. The US dollar index jumped to a 4-week high today in the light of the upbeat ADP employment report. At the same time, the pound sterling again weakened after the Bank of England announced another rate hike by 25 basis points. Apart from stronger than expected employment in the US private sector in June, the US Treasury unveiled its plans to increase the scale of the auction in the third quarter. The news set the stage for the growth in the long-term Treasury yields and also reinforced the US dollar. As the US economy is widely expected to avoid a hard landing, the greenback is advantageous to other major currencies where the macroeconomic picture is less rosy and more complicated. Global risk aversion triggered by Fitch Ratings assured investors to seek shelter in the safe US dollar. The pound sterling plunged by 0.7% against the greenback and the lowest level since June 30 following the rate hike by the Bank of England. The US dollar index strengthened to 102.80, the highest level in 4 weeks. Later on, the index pulled back a bit. The commodity-reliant Canadian dollar is extending its losing streak. The USD CAD pair traded at 1.3351 in the pre-market with a 0.03% uptick. The intraday CAD for the instrument is seen between 1.3320 and 1.3370. The loonie owes its strength to oil prices. And yesterday, both benchmark rates tumbled from their 3-month highs. Today, oil prices are making faint efforts to recoup losses. Brent crude futures climbed by 0.7% to trade at $83.80 a barrel. And WTI futures rose by 0.5%. Both benchmark rates fell to the lowest level since April 17 and closed 2% down due to the news on the downgraded US credit rating. Since oil has shown a steady rally in the last months, the time is right for a pullback. In the short term, the oil market will remain tight. On the back of the supply squeeze, U.S. crude inventories shrank by 17 million barrels last week, the biggest drop in inventories since 1982. Cryptocurrencies are trading without clear-cut dynamics. Popular altcoins are trading mixed. Having grown by 0.08%, Bitcoin opened a New York trade at $29,126. Top altcoins such as Ethereum, Ripple, Litecoin, Solana, Cardano, and Binance are wavering between drops of 3.2% and gains of 2.4%. The fundamental background confuses market sentiment and does not shape a clear-cut trend. Litecoin slumped by 5% in the last 24 hours after the token completed the halving event. Analysts reckon the slump will be followed by a rally to $150 in the medium term. Investors are trying to puzzle out whether Binance will be accused of a scam. On the positive side, the Hashkey cryptocurrency exchange became the first market participant to receive a license under the new cryptocurrency licensing regime in Hong Kong. Bloomberg analysts have revised the probability of a successful launch of a Bitcoin ETF in the United States from a 50% to 65%. Speaking of the intraday outlook for the number one crypto, Bitcoin continues to try to gain a foothold above $29,000 so far successfully, although not very confident, and the token may trade between $29,800 and $29,200. Breaking out of the range will take Bitcoin either to $28,600 or $29,700. Thank you for watching. We closely monitor the markets and provide you with the up-to-date financial information and analysis. We are waiting for your questions and comments. Subscribe to our channel and see you online tomorrow.